Welcome back again, folks. As you know, my name is Martin Jones and I am presenting to you on F8 Audit and Assurance. The way that I am presenting to you on F8 Audit and Assurance is using a mixture of different styles of teaching. You're going to do most of your learning by working your way through worked examples, and I'll be recording a couple of worked examples very shortly once this recording has finished. But another way of teaching you is just to talk to camera and give you a feel for audit. And I think you'll find the combination of these two different styles of teaching will, I hope, work for you. So you've got the real learning, if you like, taking place as you work your way through the worked examples, and then these talky videos where I do a lot of talking and waving my hands about are simply presentations to kind of introduce you to audit. Because audit is an odd subject. It seems to have no beginning and no end, and it's an intangible process. To be frank, if I'm really honest with you, I remember for the first 6 months of doing audit, to be quite honest, I'm not sure I entirely knew what I was doing. I'm sure I didn't know what I was doing, let's be honest. I'm sure I didn't know what I was doing. It's a weird sort of thing, audit. Once you get into it, it's the easiest thing in the world, but getting into it is certainly not easy. So in order to help you get into it, you will have seen that I recorded a 40-minute video going right through the first section of the syllabus in the study guide. The study guide is divided into sections, A, B, C, and so on, and then is divided into sections within the sections. And A1 is the very, very introduction to the syllabus, and I worked my way through the headings in the syllabus. As you can see from the slide just here on the left-hand side is covering statutory audits. Now, if you choose to go back to the study guide on the ACCA website, you'll see that the study guide also has got sections A, B, C, D, and so on, and that each section is divided into subsections, and that A2 is indeed statutory audit. So statutory audit is essentially what audit is. So you might remember from previous recordings I talked a lot about shareholders, I talked a lot about directors, and I talked about you being the auditor. You were auditing the financial statements. Why are you auditing the financial statements? You're auditing those because an audit is required by law. Now, statute is a reference to law, and across the globe, every individual country has passed its own Companies Act, and in every Companies Act all over the world, it says that if you form a company, you as a shareholder must have an audit. If you are a director of a company, then that company must have an audit. So it's a statutory requirement, and most audits are statutory audits. They're audits of annual financial statements to see if those financial statements show a true and fair view, and the shareholders must get that report because it's required by law. So that's statutory audit. And statutory audit is audit, basically. 9/10, frankly, to be honest with you, 10/10 of every single F8 audit paper is statutory audit. It's very, very rare that F8 goes beyond statutory audit, because statutory audit is essentially audit. Now, as mentioned in previous recordings, it is possible for any FS, for any financial statement of any form whatsoever, to be subject to an audit. But the most common audit is the one that is on the annual financial statements, and it is required by law, statutory audit. Right, I'm going to get into it now. Should we get into it? So the first line of the study guide within statutory audit, the first line of the study guide within A2 is as follows. Describe the regulatory environment within which statutory audits take place. Describe the regulatory environment within which statutory audits take place. Well, I've already told you quite a bit already. Statutory audits are required by statute, they're required by law. Now, they are required by law, and I must have an audit, and you must do an audit, and you must do an audit. But regulatory environment doesn't just talk about the fact that an audit must be done. It also talks about how it must be done. And that's what I want to look at here. Can you see these two phrases here, registered auditor and international standards on auditing? The way that the detail changes from country to country, changes quite a lot actually from country to country. But the basic idea is that you, in order to do a statutory audit, you must be a registered auditor. So you must register. Now, the usual way to register is you register with an auditing body which is itself registered with the Department of Trade and Industry in that country. So I think I'll go for that. It's not very complicated, this, but it's rather awkward because it changes from country to country, so it's difficult for me to generalise, you see. You can see me struggling as to how I'm going to convey this idea, and that's because, not that it's a difficult idea, it's a pretty simple idea, but the way that it's applied in each individual country changes from country to country, and that's why I'm struggling a bit. So, perhaps we should talk here in the UK, and perhaps we should be very specific and talk about the ACCA so that you get a real feel for this. If you are an ACCA auditor here in the UK, then you must register with the ACCA as an auditor. Once you are on the register, which is just literally a list of names on a website, once you are registered as an auditor with the ACCA, that registration is then registered on their website, and you become a registered auditor with the ACCA. That then gives you the right to sign an audit report. And that's it. Well, not quite. What the ACCA say is that in order to keep your registration as an auditor, you must follow the international standards on auditing. You must follow these things, the international standards on auditing. And these are the rules. These are the rules as to how audit is done. It's the simplest thing in the world. I rather like the expression, would you like fries with that, sir? It works extremely well. So let's go for the expression, would you like fries with that, sir? You are an auditor. You are an auditor. You're registered with your local registration body. And your local registration body requires you to do an audit in accordance with the international standards on auditing. Now, the way that they make you follow those standards is they then go and test to see if you have followed those standards. If you have followed those standards, tick, you can carry on auditing. If you have not followed those standards, cross. They throw you off the register, and once you're off the register, you can't act as an auditor anymore. If you can't act as an auditor anymore, you're thrown onto the street. You can no longer be an auditor, and you end up in McDonald's serving burgers to the public. So next time you go to work, your expression will be, would you like fries with that, sir? Do you get it? So the way that the regulatory environment works is pretty simple. You have to follow the rules. The rules are the ISA. You have to follow them, because if you don't, you get thrown off the register. And if you get thrown off the register, next time you go to work, you'll be saying, would you like fries with that, sir? Okay, so that's it. It is pretty simple, isn't it? There it is. Discuss the reasons and mechanisms for the regulation of auditors. Let's just see what we've got up here. on the next slide. Yeah, you see, you've got this thing, the monitoring unit. So, the reason for monitoring auditors is pretty flippin' obvious. The reason that auditors are monitored, the reason that they are, we don't just give you the rules, but we make sure that you follow the rules, is, if you're a crook and you start doing dodgy audits, then you're going to give a bad name to all auditors. So can I go back a slide and just show you what I'm answering there? Discuss the reasons for regulation of audits, because we don't want dodgy auditors giving dodgy audit reports and getting auditors a bad name. That's completely obvious. Now the mechanism which relates to would you like fries with that, sir, is this thing called the monitoring unit. And it's very simple. There's a monitoring unit in every country. There's one here. They call it the joint monitoring unit here in the UK. But there's monitoring units in every country. So there's one in Japan, there's one in Botswana, there's another one in the US. And all they do is they just go through the register. They normally do it alphabetically, actually. It's a pretty simple idea. So they go from A to B to C, and they just go through the list of auditors, the register of auditors, and they just audit the auditors. So this body that audits auditors is called the monitoring unit, and that's it. The monitoring unit audits auditors to verify compliance with ISA. And it is true, as I said earlier, to be honest with you, when I first started audit, I hadn't a clue what I was doing. I did a degree in a completely different subject, and I found the whole thing of business quite a bit of a challenge. But once I got into it, I actually got quite good at audit. And by the time I was into my third year, I was actually involved in helping. Let me tell you a little story so that you get a feel for this. The truth of the matter is you don't go straight to, would you like fries with that, sir? What happens is the monitoring unit go to A, and then they go to the A auditor, say, Mr. Abcott. So they audit Mr. Abcott, and they audit his audits to see if his audits are following the ISA. And if his audits are following the ISA, fine, they go to the next guy. But what if Mr. Abcott is not following the ISA? What they do is they give him a cross, but they give him a second chance. It is even possible to have a third chance, I believe, but it's pretty rare. They give you a second chance and they say, you're a rubbish auditor. You haven't a clue what you're doing. These are the things you're doing wrong. I'll be back in 6 months and I want to see an improvement in your auditing. I want to see you now compliant with the ISA. And what I used to do was I was involved in a little bit of consultancy. What I would do is I would go down as an expert auditor, can you believe? I went down as an expert auditor and helped these guys who had lost their way and weren't following the ISA. I used to help them to follow the ISA for the following 6 months. So I'd tidy up their files, show them how to do things properly, so that when they got their second inspection, they would pass then. Now, anyone that fails that second time, it's getting really dodgy. Fail a third time, you're out. And if you're out, then that's it. Next time you go to work, you will be saying, would you like fries with that, sir? Because you'll be working at McDonald's because you can't be an auditor anymore. So the mechanism to motivate people to make them follow ISA is the fear of being chucked out and working for McDonald's. There you go. Explain the statutory regulations governing the appointment rights, removal and resignation of auditors. I might have to change my pen size for this because it's quite a detailed sort of thing. It's not very difficult, but I've got a little slide to help me work my way through it, and it is little, so let's see how I get on. So here we go. I'm going to have to change my pen size, I'm sure of it. So I'm going to go for thickness of 1 millimetre here. See what you think of this. It isn't difficult, but it is something you do need to learn. Some of these things that I'm going through, you need a feel for them, but this one you actually need to learn. Appointments. I should say, of course, that legal rights and legal details change from country to country because the law changes from country to country. But these four that you see here, they're pretty stable. They don't change from country to country. They are the same in the UK Companies Act as they are in the Botswana Companies Act as they are in the Japan Companies Act. So how are we appointed to the role of auditor? We are appointed to the role of auditor by a simple majority resolution of shareholders. Easy. Auditors are appointed by a majority resolution. Rights. There are two rights. They are the rights to records and explanations. So in order to execute your role as an auditor, you need to be able to do two things. You need to be able to look at the records and verify that the FS agree with those base records, but you also need to understand those records, and to understand those records you need to ask questions and get answers, and that process of asking questions and getting answers is called explanations within the Companies Acts of the world. So there are two rights you have. You have the right to access the records and get explanations to questions that you might ask. Pretty easy. Removal. Auditors are removed by a majority resolution. No special thing there. Actually there is, and I'll come back to that in a moment, but I don't want to do it now. So appointment is a majority resolution. Removal is a majority resolution, as you can see. Resignation. It's called resignation, but it's not really resignation. Let me see if I can explain this without overdoing it. This is achieved by not reapplying for appointment. It isn't the only way, but I don't want to go too high and go way above F8. But I'll give you a flavour of it. Audit contracts, audit engagements are for a year. So once you're appointed for a year, and when you go for reappointment, you go for reappointment for a year, and then you go for reappointment for a year. So auditors tend to stay in the same audit for around about 5 years, approximately speaking. So it feels like you're resigning if you do a year, you do another year, and then you don't offer yourself up for reappointment. But the truth of the matter is, it's not really what you normally call resignation, is it? But that is what is thought of as resignation in the context of audit. So resignation is simply not offering yourself up for reappointment as at the end of your contract. So as at the end of your contract, you present the audit report to the shareholders, you then attend the annual general meeting, and then you don't offer yourself as the new auditor for the new year, and the shareholders have to go and get themselves a new auditor. And that's the normal method of resignation. Okay, so that's the normal method of resignation. It is actually possible in the middle of the year to just resign. That is very, very rare. It's considered kind of bad form. Once you've started the job, you're supposed to finish it. So it's very, very rare that you would start a contract and then you wouldn't complete it. It just isn't the done thing. It is possible to do it, but it isn't the done thing. So resignation really means not offering yourself a reappointment. Now, if you're threatened with removal, there is a couple of rights that you have, and I want to just draw those out. And if you do resignation, there is one thing that you're expected to do on top of it. So there's a couple of extra things that I want to teach you that relate to removal and resignation. If you're threatened with removal, you have the right to communicate with shareholders If you are threatened with removal, you have the right to communicate with shareholders. You actually have the right to attend the annual general meeting, but you more importantly have the right to write to the shareholders. Now, the reason that is relevant is often when you're threatened with removal, you are threatened with removal by the directors. Now, the directors can propose your removal, and if you don't want to stay, then you just, you don't fight. That's fine. But when the directors propose your removal and you feel that the directors are crooks and they're trying to shaft the shareholders, then you can write to the shareholders and say, it's not me that's bad, it's them. And you can promote an argument and you can get involved in a fight and you can try and defend yourself. And that is a right that you have in the Companies Act all across the world. So if you are proposed for removal before the majority resolution is passed, you can write to the shareholders. You have the right to write to the shareholders to explain your point of view. Resignation. It would be very, very unusual to resign during the year, as I mentioned. But if you do leave unexpectedly, even if you don't offer yourself a reappointment, if for some reason you cut your relationship short, there's almost certainly going to be something bad going on between you and the directors, and you are required to give reasons. So you might say, I no longer offer myself up for reappointment in the context of this audit because I don't think it pays enough, given the risks. Now that would be an unusual one, but one that sounds even more aggressive but does occasionally happen would be, I'm not going to offer myself a reappointment in this particular audit because I believe that the directors are unethical in the way that they behave. Now, you are required to give those reasons, and you're required to give those reasons to the shareholders. You can give them in writing or you can give them at the general meeting, but you are required to communicate your reasons for your resignation. So there you go. So resignation, you have the requirement to give reasons, and removal, you have the right to communicate. That's that. State the objectives and principal activities of statutory audit and assess its value. That's a very general one, isn't it? This is definitely one where I'm just going to talk to you about it. I'm just going to check if I have a slide here. No, so I'm going to go back to that one. My intention here is just to give you a flavour, a bit like I did with the history, but hopefully not quite so much detail. That's the whole of audit in one sentence, isn't it? State the objectives and principal activities of statutory audit and assess its value. There are books written on that, so I'll just keep it nice and punchy. The objective of audit is to give assurance. Assess its value. Well, it's ubiquitous is the fancy word for it, isn't it? Audit is everywhere, so it's difficult to know what the world would be like without it. So it's difficult really to know its value because there's never a situation where you don't have an audit, so it's difficult to know its value. But what you would be expected to be able to do is to very briefly discuss the pros and cons. It seems likely that by Companies Act requiring audits all across the world, that the quality of financial reporting goes up. But it is also definitely true that sometimes auditing goes wrong, and sometimes auditors say that the FS show a true and fair view when they don't. The classic example, which you can search on Google to your heart's content, is Enron, and I'm sure you've heard of the story of Enron. Enron did masses of creative accounting within their financial statements, and yet the auditors, when they audited those financial statements, they gave the opinion that the FS do not show a true and fair view. The auditors knew that the FS were dodgy, but still they gave the opinion that the FS did show a true and fair view, when those FS didn't show a true and fair view. At least that's one way of interpreting it. So Enron reduces the worldwide confidence in audit. Audit problems reduce confidence in the audit product. Can I just read it back to you and just summarise, because I don't want to say too much about this, because a flavour is all you need. The objective of an audit is to give assurance. And by and large, audit is successful in giving assurance. It does give confidence to shareholders that FS are showing a true and fair view. But the truth of the matter is, audit is a human process, and people make mistakes, and sometimes they make deliberate mistakes. And therefore, audit, being a human process, can only give reasonable assurance, and that reasonable assurance, even that can sometimes be challenged because of the problems of Enron and other frauds that have happened within financial reporting that haven't been picked up by auditors. So, to really make it punchy, the objective of an audit is to give assurance, and by and large it does give assurance, but some of the problems that have happened in audit challenge the value of audit, and it certainly isn't perfect. Enough said. Final slide. Describe the limitations of statutory audits. Well, we've just done it. There's really not much more to say than that. The main limitation of statutory audits is statutory audits are done by auditors, and they're people. People make mistakes, they have motivations that may not be in line with what they should be doing. People lie. So, audits are done by auditors are people, and the main limitation is that people have the potential to lie. Another limitation of audit is that you can't check every single transaction. Well, you could, but it cost you a fortune, and it still wouldn't guarantee that the FS show a true and fair view. Auditing is a very touchy-feely thing. Financial reporting is a touchy-feely thing. When you start to study financial reporting, you tend to start with the bookkeeping, which seems very mathematical and scientific. But as you work your way through financial reporting, you start to learn more about, group accounting and provisions and lease accounting and substance and revenue recognition. You'll start to realise that financial reporting is a very soft science, and the auditors are trying to audit this soft science. So another limitation of auditing is that because auditing is based on financial reporting, and financial reporting is a soft science, all you can do as an auditor is give an opinion. So the two main limitations of statutory audits are statutory audits are done by people, and people have the potential to lie. And the other limitation is even honest people are going to struggle with statutory auditing, because statutory auditing is auditing of financial statements. And financial statements are soft things based upon accounting ideas which are political ideas, and all the auditors can do is give an opinion.